Good morning, good afternoon, good evening, depending on where you're connecting from. So welcome to today's live stream. Please confirm you can hear me loud and clear. Confirm you can hear me loud and clear. You're all welcome. Drop a comment if you can hear me loud and clear. Can you hear me? Can you hear me? Let me know. Let me know. Ebuka, good morning. Sister Milala, good morning. If you have any question or any pair you want me to analyze, please drop it in the comment section. Drop it in the comment section. If you have any pair you want me to analyze or you have any question, let me know in the comment section. So let's start by looking at the calendar for today. Today is 24th of February, 2026. So as you can see, there is no major news today. We are not expecting any major news today. We are not expecting any major news today. Okay, so let's go straight to the charts. So first, we need to analyze the yen and also dollar index. We need to analyze yen and also dollar. Very important. Very important. So on yen, yesterday was bullish. Yesterday was bullish on yen, and so far today, yen has been bearish. So far today, yen has been bearish. So yesterday, the liquidity that was residing at this relative equal high was swept. And also you can see we had a fair value gap here. Can you see this fair value gap? Can you see how the market respected that fair value gap? You can see. You can see. There was an attempt to fill the fair value gap at this point. And also at this point, there was an attempt to fill that fair value gap. The gap was not filled completely. It wasn't filled completely. It was yesterday, you can see. It was yesterday that gap got filled completely. And immediately the gap got filled, what happened? You can see JPY crashed. You can see started selling. You can see, so it's been bearish since the market opened today. So where is JPY heading to? Now, this is not the right time for you to sell JPY. This is not the right time for you to sell JPY. Okay, it has already moved. You have already missed this move. This is where you should have entered sell after the close of this bearish candlestick. This is where you should have entered sell. So if you didn't sell from this point, it will not be wise for you to sell at this point. I hope that is clear. Also, if you look at the daily time frame, you can see that it is approaching a discount area. It's approaching this fair value gap. It is approaching this fair value gap. So there's a high probability we might see a reversal on yen. We might see a reversal on yen. Most likely, they would fill this fair value gap before going bullish. So all you need to do is wait for a bullish reversal pattern to form on a 4-hour time frame or daily time frame before you sell. Before you sell, okay? So if I'm going to take any risk on yen today, it will be a buy, but the buy setup is not clear yet. Okay, we have an armor here. Okay, there's an armor here, but I'd love to wait for the daily candle to close. I'd love to see daily candle close before making a decision on yen. Okay, yen is still bearish at the moment. Don't buy yen now. Don't buy yen. It's still bearish, but this is not the right time to sell. Please, this is not the right time to sell. That is clear. So let's look at dollar index. And I asked for the dollar this week. Still remains bearish. In as much the market is still trading below this resistance zone, I'll keep selling the dollar. Okay, this resistance zone. I will exit my sales on the dollar if a candle closes above this resistance. If a candle closes above this resistance, that is when I would exit my sales on the United States dollar. Okay, so as you can see here, we still have fair value gaps here that dollar might want to fill. Okay, it might want to fill these gaps. Okay, but at the moment, it is still trading below this resistance that was used to sweep. You can see the liquidity that was residing at this relative equal high was swept. It was swept. I think it was on Friday. This was Friday. Yeah, Friday. The liquidity got swept. We had a bearish reversal pattern form. That's the reason I'm still very bearish on. I'm still very bearish on the dollar. Let's go down to 4 hour. Let's see what's happening on 4 hour time frame. So you can see what's happening on 4 hour time frame. So if the current 4 hour candle closes bearish, you could risk selling. If the current 4 hour candle closes bearish, you could risk selling the dollar. You could risk selling the dollar. Okay, because if you apply your Fibonacci from this swing high to this swing low, you can see that price is at what is at a premium area now. This is the most, and this is the most consistent swing. Price is at a premium. Okay, price is at a premium. So if this candle closes bearish, you could risk selling. You could risk selling the dollar. Okay, you could risk selling the dollar. What that means that if you are selling dollar, if dollar is bearish, you are looking for buys on currency pairs that have dollar as the counter or quote currency. Currency pairs that have dollar on the right. You look for opportunities to buy those pairs, and you sell pairs that have dollar on the left as the base. You sell those currency pairs. I hope that is clear. We are not trading the dollar index. We don't buy or sell dollar index. We just use the dollar index to know the strength of the dollar. And with that, we can be able to predict, the direction on currency pairs. I hope that is clear. I hope that is clear. So if you go down to 1 hour now, I'm sure a bearish reverse pattern has formed on 1 hour. A fair value gap was created at this point on 1 hour or 15 minutes. And that could be the reversal. Okay, so you can see the reason for the reversal. You can see the reason for the value gap. This fair value gap is the reason for the reversal. This fair value gap, you can see. This fair value gap is the reason for this to this point. This fair value gap here. Can you see the fair value gap? The gap in between the low of this candle and the high of this candle is the reason for this reversal. You can see it got filled at this point. And after filling it at this point, you can see the candlestick pattern that formed. Let me increase the size of the candles. You can see the candlestick pattern that formed. It's a doji. Now, after the formation of this doji, many traders will execute sell, right? Many traders would execute sell, and their stop loss, where would they say their stop loss? Their stop loss will be residing at this previous high. That is the reason they had to push price up to sweep all the stop losses at this high. That's the reason for this move. That's the reason for this move. Now they swept the liquidity. So the best trade to take will be a sell. And if it starts selling, if dollar starts selling, it's most likely coming for this relative equal low. This is my target for the dollar. This relative equal low will be the first target. Okay, so once it gets to this low, this relative equal low. Once it sweeps this relative equal low, I will reduce my risk on the dollar. I will reduce my risk on the dollar. So dollar, my bias for dollar today is bearish. My bias for the dollar today is bearish. My bias I hope that is clear. I hope you all can hear me. I hope you all can hear me. Can you hear me? Can you hear me? Okay, so that's my take on the dollar. So let's go to the chart currency pairs. Okay, so let's start with GBP USD. What's the bias on GBP USD? So you can see the buyers are selling, interested in selling GBP USD since the buyers is bullish. Okay, since the buyers is bullish, I'm interested in buying GBP USD. Okay, I was expecting GBP USD to come fill this fair value gap. Okay, they might come to fill this gap. You can see there was an attempt to fill this gap at this point, but it wasn't filled completely. And there was a breakout from a resistance here. And also we had an engulfing pattern here. And most retail traders would have executed buy after the formation of this engulfing pattern and a breakout from the resistance. And their stop losses will be at this low. So there's still possibility for price to come sweep this liquidity. There's still possibility. Now, what they've done today is to sweep liquidity residing at this low here. After the formation of this hammer, the normal retail traders that have executed buy at this point, their stop losses will be at this point. Also at this point, this buy here, this hammer, most retail traders have executed buy. So we had a relative equal low. This relative equal low, you can see. So what they did this morning was to sweep that liquidity. Okay, and the resistance was created here. So if they are able to break this resistance, if a 1 hour or 4 hour candle breaks above this resistance, that tells me that they might not come for this fair value gap. That tells me that they might not come for this liquidity. Okay, so if you want to buy, you might want to wait for price or wait for a candle 1 hour or 4 hour to close above this resistance before you buy. Okay, wait for price, a candle to close above this resistance. If it does not close above this resistance, don't buy. So it means they might want to come for this liquidity residing here. Okay, so you either buy above this resistance or buy when price gets into this fair value gap, okay, to sweep the liquidity residing. Now, if you insist that you want to buy from this point, you don't want to wait for price to break out from the resistance, you ensure that your stop loss is below this fair value gap. Ensure that your stop loss, for example, if I'm taking this trade from this point, my stop loss has to be below this fair value gap. And the best place to set the stop loss will be the low of this candle or the low of this candle. Yes. So this will be about 55 pips. This is where you should have your stop loss if you want to take it from the current market price. Okay, this is where you should have your stop loss. Then if price breaks out from this resistance, let's say 4 hour candle closes above this resistance, you can now adjust your stop loss, maybe a few pips below the low of this candle. Once price breaks out from this high here, once price breaks out from this high, you can now adjust your stop loss to this low, So initially, if you want to take this trade from this point, your stop loss should be at this point. Once price breaks out from this high, you can now adjust your stop loss to this low. I hope that is clear. I hope that is clear. If you have any pair you want me to analyze or you have any question, let me know in the comment section. Let me know in the comment section. Can you all hear me? Can you all hear me? Give the video a thumbs up if you haven't done thumbs up. And if it's your first time joining the live stream, thanks for joining. Please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Subscribe to the channel so that anytime I come on live, you get notified by YouTube. Okay, so that's my take on GBP USD. On GBP USD. On Euro USD, what do we have on Euro USD? Okay, Euro USD is giving us a bearish setup here. Now let me start with the daily time frame. Okay, so yesterday candle closed down bearish, gave us a bearish signal. Okay, so so for those of you that are trading with this software, remember I told you when a market has moved in one direction, 100 pips, you shouldn't take that trade. So you can see where the sell started from on GBP, on Euro USD. The sell started from this point and it has done over 150 something pips. Okay, it has done over 150 something pips. So you should not be taking a sell at this point because price has done, that market has moved over 100 and something pips. I hope that is clear. Okay, so on GBP, on Euro USD, we wait for today's candle to close. If today's candle closes and it gives us a bullish bias, you should take a buy on Euro USD. You should take a buy on Euro USD. Let's see what's happening on 4-hour. Okay, so you can see the pattern we have on 4-hour. On 4-hour, you can see that. So if you apply your Fibonacci from this swing low to this swing high, you can see price is at a discount now. Price at a discount. I believe at the end of today's market, this premium, this zone is going to change to discount, and this also is going to change to. If this changes, do not hesitate to take a buy. If the bias changes to bullish and the zone changes to discount, do not hesitate to take the buy. Do not hesitate to take the buy on Euro USD. On Euro USD. Now, if you want to take a buy on Euro USD today, now it's best you wait for the daily candle to close before you buy. But if you want to take a buy on Euro USD today, you can see what we have here is an hammer. This is an hammer, a bearish hammer, which formed at a discount. Then you wait for the next candle to close bullish. So if the current 4-hour closes bullish above the high of this hammer, you could risk buying. So let's assume this 4-hour candle closes at this point. This 4-hour candle will close by 11 a.m. If you decide to buy, let's assume it's closed at this point, your stop loss should be this low. This is where you should set your stop loss. Don't set your stop loss here. Don't set your stop loss here. Your stop loss should be here. Then if at the end of the day, the bias changes to bullish and the zone changes to discount, you can now adjust your stop loss from here. You can bring it few pips. You can set it here. You can adjust your stop loss from this point to this point. That is after the close of the day and you confirm that the bias has changed to bullish. That is when you now adjust your stop loss. But initially, your stop loss should be here. Then when price breaks out from this high, this relative equal high, you can now adjust your stop loss from this point. You can bring it to this low. That is how you trail your stop. That is how you trail your stop. I hope that is clear. So on GUEU, my bias still remains, since I'm bearish on the dollar, I shouldn't be looking for sells on GBP USD and Euro USD. I hope that is clear. So that's my take on Euro USD. USD JPY. If there's any pair you want me to analyze, let me know in the comments section. If there's any pair you want me to analyze, let me know in the comment section. So let's look at what do we have on. Okay, so our bias for the USD JPY is bearish. is bearish, 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 not interested. Okay, so you can see what played out today in the market. You can see what played out today in the market. They've swept the liquidity that was residing at the high of last Friday candle. They swept the liquidity, and also I think they want to fill this fair value gap here. Oh, sorry. Okay, so they want to fill this gap here. So for those of you with this software, you can see this is our entry level one. Price has hit our entry level one. You can see it. Entry level one. Price has hit that level. So if the current 4-hour candle closes bearish, you can start selling. You can start selling. If the current 4-hour candle closes bearish because it has tested our entry level one. It has tested our entry level one. So if you are taking that trade from the entry level one, your stop loss should be entry level two. If you are taking the trade from entry level one, your stop loss should be entry level two. And I think entry level two, okay, this is entry level two. Your stop loss should be at this entry level two. Okay, initially your stop loss should be at this entry level two. So it has to be above. You can see it has to be above this fair value gap because they might still want to come and fill this fair value gap. So if you want to take a sell from entry level one, your stop loss should be entry level two, which is about 90 pips. And if you are risking 90 pips, where will be the next draw on liquidity on USJPY? This low. This low will be the next draw on liquidity. So if you are risking 90 pips for 177 pips or close to 180 pips, that is 1 to 2 risk reward, which is a very good risk reward. This is a very good risk reward. So once you execute the trade, you let it run. Hopefully before the close of the market for the week, it will get to this low. And if it does not get this low before the end of the week, at whatever level or price it gets to, you can close the profits on Friday if it does not get to this level before the close of the market for the week. So that's my take. You can see bearish, premium. Price is bearish, price is at a premium. Apply your Fibonacci from this swing high to this swing low. You can see price is at a premium. You can see that extreme premium. Price at extreme premium. So you should be looking for opportunity to sell and not buy. You cannot buy. Remember I said once the market has done over 100 pips. So from this point to this point, you can see USDJPY has done 151 pips. You cannot be looking for buys. You cannot be looking for buys on USDJPY. I hope that is clear. I hope that is clear. I hope that is clear. I hope you all can hear me. I'm not seeing your comments. Can you hear me? 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 Respond if you can hear me. I want to be sure you guys can still hear me. Can you guys still hear me? I'm waiting for your comments. Okay. So which other pair do you want me to analyze? Which other pair? Gold. Okay, gold. All right. So let's look at gold. Gold, 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 gold. I told you several days ago, this is where you should have started buying gold. Gold is still bullish. Let me see what we have here on gold. Gold is still bullish. Gold is still bullish. So you can see the market has hit our entry level one. The market has hit our entry level one. And this entry level one, if you go to 4-hour, I think it's a resistance turn support. You can see this entry level one. You can see here we had a resistance which became a support. and the market, tested that support. Yes, it's going to test that support. Okay, so my bias on gold still remains bullish. It remains bullish. Okay, but I will be looking for buy opportunity. You can see it has created several resistance levels. So I would love to see price breakout from this resistance it has created on 1 hour. This resistance it has created on 1 hour. I would love to see price breakout from that resistance before going bullish. Before going bullish, I would love to see price breakout from that resistance. Let's see, so because this low here is a level of liquidity, they might want to come for this low. They might want to come for this low because if you go to, let's say, 5 minutes, there's a reversal pattern here. You can see there's a reversal pattern here. Okay, so we had a reversal pattern here. This is an hammer. This low here is an area of liquidity. Here also we had inverted hammer. We had an inverted hammer. So this low also is an area of liquidity. So they might want to come for this before going bullish. Okay, that is why I wouldn't just jump in and start buying from this point. You can see on this time frame, you can see that it has been in a range. You can see it's been in a range. So there has to be a breakout above the high of the range, which is this. This is the high of the range, and this is the low of this range. Okay, this is the low of this range. So you can see this is the low of this range. So price should break out from, if price breaks out from the low, this zone, so this is our demand zone, or you call it your support zone. This is our resistance zone. So it's either price breaks out from this resistance zone for us to buy, or price breaks out from this support zone for us to sell. But the bias for gold is bullish. So you shouldn't be looking for opportunity to sell. You should be looking for opportunity to buy. So your focus should be breakout from the resistance. Breakout from the resistance, that should be your focus. Gold is bullish. So don't look for sales on gold. Gold is bullish. So wait for a breakout from the resistance for you to buy, or wait for price to break out. If price breaks out from this support, don't sell. Don't sell. If price breaks out from this support, it means they want to come and sweep this liquidity. So you patiently wait for them to sweep the liquidity, then look out for a bullish reversal pattern to form on 1 hour or 4 hour time frame before you buy. That is my take on gold. That is my take on gold. That is my take on gold. Is there another pair you want me to analyze? Finally, let's look at GJ. Let's look at GJ before we end this session. GJ. GJ. Okay, so GJ is bearish. Okay, GJ is bearish. So GJ, what happened on GJ today, this morning? Swept the liquidity residing at this high. You can see the market just hit our entry level one. This is our entry level one. This is our entry level two. So if you want to sell GJ, if you can wait for the day candle to close, that will be fine. If you can wait for the daily candle to close, that will be fine. That will be a strong confirmation for the sell. But if you can't wait for the daily candle to close, if you want to sell from this point, your stop loss should be at entry level 2, which is 126 pips. If it is too high, if that risk is too much, then you wait for the daily candle to close. Okay, you wait for the daily candle to close. But initially, your stop loss should be at this point. If you want to sell GJ today, your stop loss should be at this point. Okay, your stop loss should be at this point, entry level 2. That's where you should set your stop loss. Okay, then let's go to 1 hour. Let's see what's that. Okay, so you can see 1 hour. A bearish reversal pattern has formed after price did what? It's entry level 1. You can see that. So it has formed. So let's see if there's a fair value gap here or resistance. So I think what they came for, you can see what they came for on GJ. Can you see what they came for? Can you see what they came for here? This is what they came for. A minute. This is what they came for. You can see this. We had a fair value gap here. We had a fair value gap here. And at this point, that fair value gap was they attempted to fill that fair value gap, but they didn't fill that gap completely. Now, after the formation of this candle, you see we have spinning top, and we had this hanging man. They know most retail traders would have executed sell. They know most retail traders would have executed sell, and their stop losses would be at the high of this candle. This is what they came for. This is what they came for. So now they've swept that high. They've swept that high. Let's see the candlestick pattern that formed. Okay, you can see. So let's see. So you can see. You can see. So if you go to 1 hour, the previous candle closed as a shooting star, which is a change in trend from bullish to bearish. Okay, so if you want to take this trade, like I said, your stop loss should not be at this high. Your stop loss should not be at this high, because the normal retail traders that have executed a sell now, and their stop loss will be at this high. So they might still want to use this high as liquidity. That is why I said if you want to take this trade today, your stop loss should be at entry level 2. Your stop loss should be at entry level 2. If by the end of the day, this high still remains the high for the day, if at the end of the day, this high still remains the high for the day, then you cannot bring your stop loss from this point. You can bring it to this point. Okay? If this high remains the high for the day, you bring your stop loss from where it is, you bring it to this level. I hope that is clear. So that is my take on. So that'll be all for this session. That'll be all for this session. If you are interested in getting this Signal software, do send me a message on WhatsApp. If you are interested in getting the Signal software, send me a message on WhatsApp. Okay, 1 month subscription goes for just $20. 1 month subscription goes for just $20, and 3 months subscription goes for just $50. Okay, if you are having challenges analyzing the market, if you are having challenges defining the trend of the market, you need to get the software. If you are new to trading and you want to start trading profitably, you need this software. If you are tired of losing your money, if you are tired of losing money, most of you have been trading Forex, and all you've been doing is, depositing. You've never made withdrawal. If that's your case, you should get the software. You should get the software. But if you still feel like you still want to donate to the market, you don't need this software. Okay, you don't need the software. You don't need the software. I don't want you to make losses. I don't want you to make losses. That is why I and my team have created this software to ensure that you earn from this market consistently. Okay. Now, this software is not for those who want to scalp. It's not for scalping. This software is for day traders and swing traders. So if you're a scalper, you don't need this software. This software will not work for you. It is only for those who day trade and swing trade. So if you're a scalper, I'm sorry, this software was not prepared for you. Okay, this software was not prepared for you. It's for those who want to day trade and swing trade or position trade. Okay. So if you are new to trading, by 11 a.m., I will be having a class with new traders. If you are new to trading, you want to learn how to analyze the market, you want to know when to buy or sell a currency pair, you should join me by 11 a.m. 11 a.m. And that session will be streamed via Zoom. That session will be streamed via Zoom. Please, the class is designed for new traders, not experienced traders. I'm not going to take, if you're an experienced trader and you join the class, I'm not going to attend to your questions. I'm only going to attend to questions of new traders. Okay, I'm only going to attend to questions of new traders. So today I will be teaching market analysis, how to know when to buy a currency pair and when to sell a currency pair. That is the topic for today's session. We started the session yesterday, and yesterday we covered the basics of Forex trading. So today we'll be going into market analysis. Okay, so you can join the class. If you want to have the link, you can send me a message on WhatsApp. Send me a message on WhatsApp. My number is 080-378-36189. 080-378-36189. I appreciate you all for your participation. Ebuka, Mrs. Damilola, those are the names that I can see here. Okay, I really appreciate you participation, and I wish you all a profitable trading day. You can see my number on the screen. If you want to get the software or you want to join the session we'll be having by 11 a.m., my number is on the screen. Send me a message on WhatsApp so that I can provide the Zoom link. Once more, I want to appreciate you all for always showing up for the classes. I want to believe you're getting value from the sessions. I wish you all a great day. Bye for now.